All right, it's a red Tuesday, as you saw. How about Nike? Let's show the shares. There they are. Not doing much. They've done a lot lately, though. Mostly go lower. So, Steph, Goldman Sachs today, call the day, reiterates Nike as a buy. They have a 60% upside to their price target, 145. Okay? In what has been a really negative environment, at least, I mean, stock performance, Wall Street commentary has been kind of brutal. What do we do with this?
I mean, it started with Foot Locker, right? I mean, that's what started the decline. This stock was really a good one the first half of this year, right? And then it rolled over hard.
What were we talking? I'm sorry to interrupt you. Wasn't there a stretch? We are talking about Nike where it had like 11 straight days of losses, like the longest streak that's had forever, right?
Yes.
Now it's on pace for its 8th straight.
I know.
So it goes through these stretches. Now, you must think that these are buying opportunities, that stock's cheap.
You know, that's the problem.
It's not that cheap PE.
No, it's not. That's the problem, right? It's a compounder over the years. This is a longer-term call for me. It's been disappointing for sure, but you've had a derating in the stock. On average, the stock trades at 28 times forward. It's now at 24 times. Very rarely does it trade in this area, and that's because it is the #1 company in the industry. 78% footwear share, right, around the world. They do have exposure to China, which, you know, I actually like the consumer recovering in China. I don't like China per se, but I think the reopening will help. I like their brands. I like their innovation. And I do think that one of the problems that these guys have seen over the last couple of years are depressed margins. We talk about it all the time. EBIT margins are 11%. If you believe, like I do, they can get back to the upper teens, this stock has earnings power of $6.50. You're at 3 and change right now. Over the next couple of years, how is EBIT margin? How are they going to get better? Well, you got lower freight costs, lower input costs. We'll see what happens with the dollar. That'll be a problem. But inventories are coming down. Inventories were down double digits in Greater China and the U.S. last quarter, right? And they're flat overall for the company. I mean, they were so bloated a year ago. So there's a lot that they can do right. And I still think they are the dominant player in the industry.
I mean, it's Nike.
Right.
Say no more.
Just do it.
Just buy it or no? Josh Brown.
I want Stephanie to make money here, and I think ultimately she will. Technically, this is a falling knife. It's a new low now. I think if you want to buy the stock, and there's a lot of compelling reasons to want to buy the stock on historical valuation, I think there will be a chance. I just would say not yet, and definitely not into this earnings. Your risk is they have an amazing quarter, the stock gaps up 10%, and then probably by the end of the day fades and loses half of that. And then you say, oh, I could have bought it at 90, it's 92. Like, that's your risk here in not getting in. Your risk to the downside, I feel, is greater. I think it's also worth pointing out, over the summer, a analyst at Cowen came out and pointed out that if you look at Hoka and On Running, a stock which I should have made money with, but I sold too early. But if you look at those two names, he pointed out they spent the equivalent of 2 weeks' worth of Nike's marketing budget over the course of 4 years and managed to steal $3 billion worth of sales from Nike. And he referred to it as an unchecked competitive environment. And I know Nike's had competitors its whole life, so that's not new. But if you combine that with the fatigue, don't forget how many sneakers people bought during the pandemic. So that's the real inventory, not inventory in stores, inventory in people's closets, or in my case, in the garage. We're not allowed to wear shoes in the house. Hi, Sprinkles. But if you think about the sheer amount of athletic clothing and shoe buying during the pandemic, that inventory has to work itself off, and that could take a while. So I think Steph will make money here. I just feel like it's going lower before it goes higher.
You feel like, I feel like you almost alluded to complacency from the company to its potential competition.
It's tough. They're an incumbent, and Nike, you know, spent a lot of its early life as like this upstart brand that was willing to do dangerous things with their marketing, et cetera. That's obviously not going to be the situation now, but they are the best shoe company on earth. The fundamentals are still very good. I just think it's a tough situation where they are right now.
And I hear what you're saying on Hoka because I actually wear them. And
I know you do.
And so I hear you on that. And On, I haven't tried those yet either, but you know you turned me on to that too.
Like butter.
But you're talking like 2% market share.
No, I understand.
You know what I mean? Like, come on.
I understand.
78 or 2.
I understand.
Somewhere in the middle, right? And this stock is pricing in like it's losing massive share. I just don't think that's the case.